Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu from location. Sonu, it's a gorgeous day. Where are we?
Central Park, New York City.
Central Park. Let's give everyone a view. Look at that.
That's where we are.
Yeah, it's we always like to do these in unique, fun areas, and we thought we'd do one from Central Park as we're in New York right now. But let's just dive in, Sonu. We're titling this one,
Should we worry about geopolitics? There's been a lot happening around the world, the Middle East, all of that. So we just went through something last October. Markets rallied. Ryan, what do you think?
You're right. I mean, it's devastating, clearly, what's happening potentially in the Middle East. As of now, it appears cooler heads have prevailed. At the same time, you can't minimize what's happening, Sonu, but we took a look at 39 of the most influential geopolitical events. We're talking 9/11, we're talking world wars, we're talking assassinations, JFK. What we found incredibly, honestly, 3 months later, S&P's up barely, but it's up 3 months later on average. Now, we're not minimizing, again, what's happening. And some of those times, what happened? Well, there were recessions, and the market didn't do as well. The truth is, if we can avoid a recession, and Sony, you're going to talk about that next, why we think we will, you probably can have some, well, we are having some volatility around what's happening in the Middle East, but it's likely not the end of what we think, again, is a new bull market.
Yeah, volatility, especially geopolitical-related volatility, comes amidst a weak macroeconomic backdrop that's worse. But right now we don't have that, right? The economy is growing strong. We just got retail sales this morning when we are recording, retail sales for March, and it's been strong.
Yep.
Right? Consumers are spending, especially online spending, which was incredible to see over the last 3 months. Online spending has surged much, has accelerated, right? So, which means, consumers, households have more incomes, and that's what's driving the economy. Most of the economy's consumption, that's running pretty strong right now.
What's interesting to me, Sonu, is there's different sentiment polls. One of them last week was the Michigan Consumer Confidence Poll. It came in, I honestly going to forget the exact headline, but it was lower than expected, weakening. Yep. Yet literally like 2 days later, we've got retail sales, hard data that's strong. This is a theme you and I have talked about before. Soft data is one thing, hard data is another. Apparently it's not changing, huh?
No, exactly, right? Consumers still think, and that's the thing, if you ask them how are their own financial situations, they say, it's not too bad. It's pretty good. Yeah. And we see that in the hard data because they're spending. Right, but you ask them, okay, how is the U.S. economy doing? And say, the economy isn't doing all that well. Yeah. And it's the same story with businesses. Even businesses are spending, they're generating profits, profit margins are rising. All of that is good for the stock market. We're seeing the stock market rise, albeit some volatility this week, right, with everything that's happening. But the story is good. Like I said, the macroeconomic backdrop is very strong. Whether you look at the economy or markets, but sentiment still seems dour, and that's not a terrible thing, right? I mean, sentiment, if everyone is bullish, that would be something to be worried about.
Yeah, exactly. We have more bulls than we did a year ago, I think, for sure. But let's just put some context around this. And I know we've talked about this before, but let's do it again. The last 12 months on a calendar basis, S&P 500 up 30%. The last 5 months, S&P 500 has been higher, at least 1%, all 5 of those months. 100 trading days off the October low, which was a couple weeks ago, up 27%, one of the largest 100-day rallies ever. As longtime listeners to the Take 5 series know, we've been bullish, we've been optimistic. Let's also be realistic. After moves like that, some type of at least sideways consolidation, little volatility, and again, the headlines are quite scary when we see it, but the underlying pinnings and the fundamentals of the U.S. economy, as of we see right now, are what, Sonu?
It's strong. Yep. It's, the economy runs on consumption, as I just noted. Consumption's running strong. But even if you rewind to last year, we are actually in a better place compared to where we were last year this time. Why? Because cyclical areas of the economy are also coming back. Manufacturing is coming back. The global economy is starting to recover. There's fits and starts, but the news is better than it was last year. Housing is starting to come back as well. So all of this is going in the right direction. Yes, the market's concerned a little about maybe we won't get the Fed to cut interest rates as much as we expected 3 months ago. But again, that's just a symptom of a strong economy more than anything else.
I know we've got maybe 30 seconds or so, and that's a good point because, listen, the market was telling us, the Fed Fund futures, don't get too geeky, but the market was saying 5 cuts, 6 cuts this time a couple months ago. Now what is it, about 2 cuts, maybe 2 or 3? Yeah. But why? Why is there less cuts? Because the economy continues to be strong. To us, couple cuts still makes sense this year. Maybe we didn't need 5 or 6. We kind of pushed back against 5 or 6 cuts this time, 2 months ago. And again, if the economy is strong and we don't have as many cuts as maybe we were thinking, that doesn't sound like the end of the world. Sonu, maybe wrap it up in 15 seconds. Earnings season's here. What do you see for earnings season?
I mean, look, the economy is running strong. Nominal GDP growth, that's real GDP growth plus inflation, is running around 6%. In a situation like that, you expect earnings to be strong. And that's kind of what's happening, right? Yes, companies try to play down how much earnings they'll make, and they try to beat expectations and things like that. But at the end of the day, big picture, earnings are going to be strong because the economy is strong.
Absolutely. So again, this is your latest Carson's Take 5 title. I forget the title.
Should we worry about geopolitics?
So should we worry about geopolitics? Live from Central Park in New York. And cool about New York, everyone's walking by with two guys just at a phone talking to it. Yes. Nobody cares. It's just perfectly normal in New York to see this.
Sun in my face.
Yeah, sun's coming out, but it is a gorgeous day in New York City. So take care, everybody. We'll see you next week. Goodbye.